I want y'all to start using breakaways, and because a lot of times breakaway gaps will happen near the entry. So if y'all pay attention to it, y'all will, get a good entry off of it. Um, Especially because
Okay.
we should be entering off displacement. What's up, bro?
No, so for example, for a breakaway gap, if I'm trying to enter, if I use a 1 minute for entry and a breakaway happens in the 1 minute, what's the process? I don't have seconds on my chart anymore. So how,
Yeah.
like, what's your mindset on doing that?
So in that case, I would just be looking left to see if there's a swing in it. Like let's say you taking like a let's say let's say you got this order block, or yeah, let's just say you got this order block or this fair value gap right here that you're trying to go long off of. If those three 1 minute candles form a fair value gap, right? That fair value gap you was looking at, and let's say you look left and you see that it's a 1 minute candle swing high in that fair value gap. That would tell me that as soon as the next candle open up, that is probably not going to make it to that order block that's resting below. It's probably not going to make it to the CE of your fair value gap. It may not fill the fair value gap. It may, but I'm probably going to enter as soon as that next candle open up and tap like the first little tiny tap into it. I'm not going to wait for it to come down to CE. I'll put my stop loss somewhere, under the fair value gap to make sure I'm straight, but I'm not finna wait for it to come down because it can just open up, tap that thing, and take off because it has a gap in that swing. And then if you're not prepared for that, you might miss your entry. You know what I'm saying? Like you may be waiting for it to come back down, and that bitch then already took off, and you done missed the entry. And if you try to get in late, it might be too close to your drawing liquidity, and now you're giving up RR. So that's what you would kind of have to do. You just have to look left.
Thank you.
Yeah. All right, so let's go ahead and go through this 10 a.m. candle thing, and we're gonna do some more practice around breakaway gaps too, because yeah. All right, so I'm gonna run through this. Why is the 10 a.m. candle important? By 10 a.m., the market has absorbed volatility from the opening bell. So like 9:30 to 10, you already know the first 30 minutes be playing around. It often reveals the true intention of smart money after the initial manipulation. So after that initial 30 minutes to an hour, price usually give us the right direction, which is why another reason why I'm trying to wait a little bit later. The power of three, so y'all know about accumulation, manipulation, and distribution. The 10 a.m. candle is a new 4 hour candle opening. It's a new hour candle opening, so it's gonna open up with accumulation and manipulation. So that's another reason. Like if you wait a little bit, you can probably avoid the chop and get in line with the distribution of the 4 hour and the daily candle. So yeah, it either reverses or continues. I think I have examples of both in here. I'm not sure. What's another reason it's important? The session time, and it occurs in the New York session, the most active trading session. And institutions typically become like they come to the market after that first 30 minutes to an hour of manipulation, and then they start, putting in orders and stuff. So that's why it's kind of important to wait and have more information and not get caught up in the chop. Psychological impact. All right, so psychological impact. Retail traders are positioned based on pre-market setups. I'm not saying you are a retail rookie if you trade pre-market, but that's just where the big banks and the algorithm institution, whatever, that's where they expect most retail traders to be trading. Like as soon as they wake up, as soon as they think the market's about to open, like get in there and just try to guess which way it's going. So a lot of their stop losses be vulnerable to manipulation around 10 a.m. So smart money uses its time to trigger stop losses and execute their own trades. 4 hour 10 a.m. candle is law. Yeah, for sure. Low key. How to use a 10 a.m. candle. This is how I would use a 10 a.m. candle. This is how I've used it in the past. As you wait for the 10 a.m. candle to open and close, then you observe whether it sweeps liquidity. Like, does it run a session high, does it run a session low, or does it tap into a key level like an order block or a fair value gap? And then you would watch for confluence, aka a key level. Like you wait to see if one was created prior to the 10 a.m. open. And then when 10 a.m. opens, you look to see if price is either going into a key level or heading towards one. And then you just monitor for confirmation. You wait for market structure shifts, retracements, just anything to confirm like a reversal, anything to confirm that the opening move at 10 a.m. was manipulation and it's giving you the wick of the 10 a.m. 4-hour candle. And then you just enter with a safe stop loss. All right, so here are some examples, right? Prior to 10 a.m., you can see the timestamp here, 9:50. And this is what I was talking about earlier, right? We see that the drawn liquidity is here. We already took some shit down low. We smart money reverse. Candle is a doji, so we're about to flip. At 9:50, a lot of times, I'll take this trade to this drawn liquidity and be done for the day and don't give a fuck what they do after. Either it'll keep running or reversing, right? Here's step 2. So here's we smart money reverse in pre-market. 9:50, I'm looking at key levels hold, like this little fair value gap over here, this little order block. And then okay, zoom in out further. And then we going up. So I will take that to the drawn liquidity, be done for the day. Or you could, if this is not clear as it was on this day, you can wait for this to happen, right? And then you wait for price to confirm reversal. Okay, IFEG, change in state of delivery, whatever it is, something to confirm that, okay, this was the wick of the 4-hour candle. We got lows down here. We can distribute the body. So you see here, the IFVG entry. You could do breaker entry, whatever confirms the smart money reversal. Enter, boom, and it's a 4-hour candle. So you see how the 4-hour candle started as a doji. It pumped up, making people think we're going long, and then it wick reverse. That candle flipped, and then it distribute the body lower. Boom. All right, so this is a bullish example. You can locate the nearest drawn liquidity prior to 10 a.m. We see that we got order block, fair value gap, order block there. If price is truly bearish, then it'll disrespect all that, then come down here. But if it's bullish, then boom. That's why I have a love-hate relationship with 950 MAC. Yeah, because some days it'll be clean as hell, like on this example. Like you took this buy, any buy here, boom, to that, that's fucking amazing. But then sometimes it don't be. It be like this. So that's the hard part. Step 2, wait for it to get back to the key level. Y'all see it, 10 a.m. candle open up, pushes down here. This is after 10:30. We in the key level. You can follow the candles here. Boom, 4-hour candle, boom. 4-hour candle, boom. Got people thinking we're going lower. Bullish price action holds. This bullish model holds. Smart money reverse, boom. Come down, boom. This little move right here, IRL to ERL, boom. Extend, boom. So you got to practice that. Look at your charts and stuff and practice that a little bit more. But I'm definitely gonna be trying to wait till after like 10:30 for sure, because it's easier to catch the distribution for the day versus trying to catch like the wick or something like that of the daily candle. So closing statement, the 10 a.m. candle will typically be used to distribute price action for the day. Because the 10 a.m. candle also starts a new 4-hour candle, it is best to wait for the accumulation manipulation to happen before trading so that you can be in line with the distribution of the higher time frame order flow. Does anybody have any questions on anything we went over today?